Okay. All right. So yeah. Hey guys. Thanks again, David, for having me. Appreciate it. And yeah, I don't like I said, the idea behind this whole presentation was to just come kind of just now without anything prepared. So I figured I would go through this first and just remind you that trading does carry significant risk, and all information in this presentation is provided for educational purposes only and is not an offer or recommendation to trade future stocks, options, or forex. So don't trade with money you can't afford to lose, and historical results are not necessarily indicative of future results. So like I guess the idea behind this today is just come unprepared and kind of just figure out what you guys want and go from there. So I'm going ahead and stop my video because that'll increase my bandwidth because I live in a rural area. So I'm actually using cell towers for my internet connection. But do you guys have, well, let me ask you guys, I primarily focus on futures trading. I can dive into stocks. I saw Aaron going through some stocks and some ETFs and whatnot. I mean, we can touch on that, but I mean, if you guys want, I can show you a simple, actionable strategy that it doesn't matter if it's a stock chart or a futures chart or a cryptocurrency or forex. It doesn't matter. It works. We can go through that. We can look at symbols. We can focus on futures or stocks and ETFs, options, whatever you guys would like to do. And eventually what I do want to show you guys is our automated trading systems. For example, we have automated strategies running on a VPS, not to talk, so as we can do our own discretionary trading on our desktop, and you can see them running right here. I just logged into the VPS. We're connected through Interactive Brokers. And this is what we've done so far this month, trading a portfolio of bots. And I could spend some time on this. We could talk more about this. We could talk about futures or stocks, whatever you guys want. So, hey, Mahesh, how you doing? So yeah, whatever you guys want to do, you guys let me know. This is about you. And like I said, I'll just dive into anything you guys want to look at. So what we're looking at right now is our automated strategies. We got a portfolio of different bots running. This is where we're at so far this week. These are the realized gains this week. Well, Chaos, one of these I had to reset. A couple of these I had to reset. So this is actually, I guess, today. Right now, we're down a little bit today, but this is where we're at for the entire week so far, and well, actually, this is where we're at for the entire month on our positions. So, yeah, do you guys have any questions? We've got different bots that run different strategies, and they all work together, and they'll act kind of as a hedge. And the idea is not to trade just any one bot, but to trade several bots in a portfolio. And what I'll do is invite you guys. I'd like to invite you guys to a class. If you guys want to join us, it's fine. We've got a class today, actually. Let me post that link in here. If you guys want to join us today, you can click on that link and join us today in our class this afternoon. I will be there, but more importantly, Christian will be there. He's the architect behind the bots, and we'll show you a uniquely proven way that anyone can use fully automated day trading systems to go from zero to full-time trading without fear of that your bots will lose it all. We have different portfolios, for example.
That'll be right after today's event is over, so everyone can go straight from this to your event if they want.
Yeah, exactly. Perfect. Thanks, David, for mentioning that. So, yeah, do you guys have any questions? Okay, Mahesh, what's your favorite method of trading? Maybe talking about that will help us understand it better. Um, well, I have the bots running in a portfolio. This is the company's, one of the company's VPSs. I have the bots running. I'm running a 6 bot portfolio, just trading micros right now. Testing it out, small account, and it's up about, it was up about $2,800 just in 60 days. Just trading micros. So, it's possible to make, some to supplement your income, just trading micros with a small account. I prefer discretionary trading. So for example, this is just one of the strategies. We have this program also called Signal Lab that I teach in there. And it's a suite of indicators. And what you're looking at is a stack, for example, of different indicators that we used. Some of our own, like this target and stop channel grid, and the multi-moving average crossovers. You can see this is the volume average price with standard deviation bands and the RSI 2-bar down in here. And I can show you some really cool stuff with that RSI 2-bar, even from a longer term perspective, like day swing trading stocks, for example. But I primarily focus on price. And there's a few patterns that I look for. So for example, let me show you a pattern that I would look for. What I try to do is I line myself up with the larger time frame. So whether it's swing trading or day trading. So if I'm day trading, I'm going to typically look at a 30-minute chart as an anchor chart. Okay, this is my anchor chart. From here, I determine larger time frame trend. Okay, and then trade direction. All right, long or short, right? Larger time frame trend, and then trade direction, long or short. And then over here on my 1-minute chart, I'm going to find my entries, determine my stop, and identify my profit targets. And I typically will look at 1-to-1, 2-to-1, 3 or 4-to-1 reward to risk. If I'm trading just 3 contracts, if I'm trading 4, then that last one's a runner. Now, how I determine, do I take off at that last position or that third position at 3R or 4R depends on context, which is, I derive from that larger time frame trend. One of the things that, yeah, you could trade 1 micro. Yes. Yeah, definitely. That account, that VPS that I showed you, that was trading the full E-mini, but you can trade micros on it. In fact, we have clients doing that. And shoot, let me see if hold on, let me see if I can find the, give me a second. I can show you some of the testimonials from that, and then I'll come back to this, Mahesh, as far as, give me a second. Let me find that link that I need to find for you guys. Hold on a second here. Okay, should be this one here. Let me just double check. They've got them at the bottom. Yeah, so here's an example here. We zoom in. You'll learn if you attend today's session in 5 hours, in 6 minutes from now. You'll learn all about what we're offering. Okay, I'm not going to go into that here because I'll have Christian explain it. But yeah, we've got several testimonials in here, and this is just a few of them. And there was one of them, I think he had traded the full 40 bot portfolio. Not that you have to trade that many. We have 5 bot portfolios, 8 bot portfolios. We're working on one now, a 12 to 15 bot portfolio that literally your max drawdown is about 2.5 to 3% of the total net profit. So, and when folks join us, I usually set them up with like an 8 to 15 bot portfolio to get them started. We're using those bots that minimize drawdowns, because the profits kind of take care of themselves when you minimize the drawdowns. And the idea behind this is just to let the bots trade, not interfere. So you'll learn all about this today if you join us in that session, and I'll repost the link here towards the end. But I mean, there are guys, that are making money with it. So I'm doing it personally as well in a separate account, but that's automated trading. The idea with that is to just let it go. Okay, just let them run and not interfere. I have found that when I just let them run, I actually do better. Okay, well, they do better. And I save my discretionary subjectivity for my own personal trading. And let me show you guys now kind of what I'm looking for. What I like to do, in my own discretionary trading is notice that this is just one example. You guys can use moving averages here. This is just one example. Let me kill the VPS because I can tell there's a little bit of a lag. You can use a simple 8, 21, 50 moving average on here to define that larger time frame trend. And your goal is, for example, let me throw that on here. Let me just throw an 8 and 21. There's a multi-MA cross zones indicator in here that I'll throw on here that kind of takes care of it. I'll do the 21 and 50 so you guys can see it. Moving average here. And I'll make this a 21 and a 50. Okay. So you can see how that lines up with this target and stop channel grid. And then if you throw an 8 on here, it's a little bit tighter. It kind of hugs that price action. These are my favorite moving averages, that 8, 21, and 50 for this larger time frame. Let me insert an 8 on here. You guys will see what I'm talking about. It kind of hugs, price action kind of hugs that 8 EMA, and that's how you know that, hey, we're seeing sustained upside momentum in here. So what you want to do is, when you see that on the larger time frame, okay, let me add that and make this white so it stands out. So when you see that on the larger time frame, you want to line yourself up with momentum. Okay, so for example, this is a 30-minute chart. Okay, and if you're a day trader, you're trading off, for example, you can use a 30-minute chart for an anchor chart and a 1-minute chart for your entries and whatnot. If you're a swing trader, okay, and you're trading more longer term, all right, you can use a daily chart for an anchor chart and something like a 30-minute chart for your entries. Okay, so for example, from a swing trading standpoint, right here, the market is making new highs. And I pulled this actually pulled off of a scan just using barchart.com. That's how I found this stock. Just a simple scan here, where I'm looking at, this is it here. And why did I go way down here? Because that's where the volume is. So you can do something and just look for something with 3-6 month new highs. Okay, stocks that are making new highs, or even when the S&P is making new highs, you'll see a lot of these stocks that are relatively stronger than the S&P making new highs, obviously, as well, right? And then you can compare the stocks against the S&P. So for example, this is one of the stocks that you might want to be in, right? Where the S&P, let me go to SPY, is pulling, it's actually in a downtrend. Notice how it's below its 200. Okay, so we want stocks that are stronger than the S&P, because then what happens is when the S&P goes down, those stocks may just go sideways, or they may even continue to go higher. or if we get a little bit of a bullish day in the S&P, even though it's in a downtrend, those stocks that are relatively stronger, they'll pop. Okay, so for example, this is one of them where the S&P is making new lows and this stock's making new highs. I want to be trading in a stock that's making new highs. Okay, so what I'm looking for is some type of pullback in here. And the best trade ideas are looking for some type of pattern. And what I found is looking for a pattern. This is a pattern that I look for. There's 3 patterns that I look for in a pullback to look to buy the market. There's a 3 drive pattern where you get 1, 2, 3, or a pattern like this where you just get 1, 2 new lows, and then you get some type of retest, and then it fails, and then starts, takes out that high. And there's also, I call measured move down pattern, where you get a measured move down, and then the market balances. It could be like this. It could be a triangle type pattern like that, and then it continues lower. Then when it completes the pattern down in this area, that's your entry price. Okay, and then when the market starts moving back up, you can use a moving average like the 13 EMA, like right in here, for the trigger line. So or an 8 EMA in this case. But the idea with, like, for example, let me just walk you through this entry here on this trade. So if the market's pulling back in here like this, okay, typically what you're looking for is some type of like measured move, or like I said, one of those patterns. Well, we don't really have, you got to move down, right? You do have a 1, 2, 3 here. See that 1, 2, 3. So we've made like 3 significant new lows, and you'll see that a little better over here. But you got this one here, get a little bounce, got to move down, a little bounce up, move down, little bounce up, and then another move down. That's that 1, 2, 3 pattern. Okay, it's not always perfect like that. Sometimes it's, like that. It's not always perfect. But what I found is by waiting for this 1, 2, 3 pattern, it's actually helped me kind of prevent whipsaws. Okay, look, 1, 2, 3, and then and even if you're wrong, it's relatively, you can use a tight stop in there, because when you think about it, Elliott wave. You get that 1, 2, 3, right, and then the correction. It's similar to that. So I look for these types of patterns in pullback. And if you look at your 30-minute chart over here on the right, okay, after we made new highs, right, you're looking for it to pull back. Well, here's one, and we went sideways. Okay, pulls back. There's 2, we went sideways again, pulls back, and then there's 3. Okay, now what you can do is use, after you get that 1, 2, 3 pattern, and usually that last push is associated with range expansion and volume and even volatility. So what you'll usually see is you'll see like a sustained move for a while. And then if you use that, for example, in this case, the 8 or 21 as a trigger line, then you're getting in right around in this area. Okay, the trend is up over here, right, on your larger time frame, and you're taking your trade right in here, and entering the trade in here. And that's the other thing too that I've noticed is that when you see a directional move, you usually get 2 pullbacks in there. Okay, so like when these moving averages, see how these moving averages kind of come together right here. When you see typically what you'll see is you get 1, 2, like that. And then what you can do is typically draw a trend line across there. And then that's where you're looking to take the trade. So the pattern kind of looks like this. So here's your moving average coming down, typically your 8 and 21. And you'll typically see 1 into or near the moving averages, 2, and then there's that third push. And you can almost draw a trend line. Okay, I love this it's a trend line break. You can draw a trend line across these 2 peaks, these 2 swings, and then look to enter the trade. Okay, so for example, right in here then, okay, moving averages come together, right? So we've got contraction and then expansion. So after you see this expansion, wait for the market to pull back a couple times. Well, here's it pulled back to moving averages, and here it pulled back to moving averages. Draw your trend line across that. Look at how the market broke out and pulled back to it. And this is, I call a breakout, kiss goodbye. And typically when you see a breakout, kiss goodbye, you're typically going to see 3 new highs, where this is 1, 2, 3. Okay, sometimes you see more than that, but that's very typical. So you can use that to your advantage, and especially picking reversals. And typically what you'll see associated with the reversal is the market to test 4 times. 1, 2, 3, 4. And this 4th test, sometimes it's right on the money. Sometimes it's a little bit higher low. But when you want to pick tops and bottoms, I've always heard somebody say, don't try to pick tops and bottoms. And so what did I do when I first started trading? I try to pick tops and bottoms, because right, that's where you get the majority of the meat. That's where the low risk, high probability trade is. You have to wait for that momentum shift. And what I found is if you use that just this little pattern or this little technique where you have moving averages coming down, you wait, here's your cross, for example, where you have contraction then expansion. Then you look at that 1, 2, 3 pattern. Okay, here's 1, 2. Well, in this case, it's a 1, 2 retest failure pattern. But you draw a trend line across that, and then that's your trend line break. And by then, you can see the RSI has actually started to shift up, right? We actually have positive divergence in the RSI, because you don't have to get in at the lows, right? But you want to get in right when that momentum shifts. And you can see that momentum shift in the RSI here. Okay, see how things are shifting from down to up? Notice how, I can even draw a trend line across the RSI and see that, okay, the RSI will kind of give you clues ahead of time that things are shifting here from down to up. And you can see the RSI has shifted. The fact that it made a lower swing high, and then now we're making a higher high in the RSI, is a clue that things are shifting back to the upside. And notice that this is pretty cool with the RSI. This is a 10 bar, I think. Yeah, this is a 10 bar. Notice that we've got relatively equal highs here, but a higher high in the RSI. See that? So that's actually positive divergence. It's kind of like hidden positive divergence. So that's something else to look for if for defining that sweet spot where the market's going to resume trend. But the key is lining yourself up. This is already in an uptrend. You got institutional players coming in here because of the volume and range expansion. So the idea is you want to trade with them, right? And again, I just found this stock over here on your new high list. That's it. So if you're looking for stocks, you can do it that way. The same principles apply no matter what market you're trading. If you're trading futures, it's the same thing. We can look at, for example, over here, ideally, the best trade ideas are going to be right after, on that first pullback after the trend changed. Okay. So for example, see how the price action, the market had pulled back, and we get, again, we've got a new low here, and then we tried 1, 2, 3, 4 times to break lower, and it couldn't do it. So a lot of times when you see these reversals, you'll see the market try 1, 2, 3, 4 times, and it can't do it. And if it fails to break on fourth, because usually what you'll see is the market will break it on fourth. And if it fails to break on fourth, then you get a big move in the opposite direction. I mean, my whole strategy is based off of that. It takes time to get there. You know, you have to learn, you know, just you have to study price action. But what I'm showing you is something that you can use in different markets. Now, none of the bots that I showed you earlier, none of those are based off of this. They're based off of something completely different. But I was just showing you kind of my own discretionary trading. So, and if you'd like to learn more, you know, you could join us in that automated session or in that session today where we talk about automated trading. And then you'll be on our list too, and you could learn more about what we do. You know, our workshop, we have a workshop, probably in a couple of weeks, we'll have another workshop. You'll be able to join us in there and learn more about kind of what we're doing with our discretionary trading. So, do you guys have any questions on what I went over? That's what I'm here for. Do you guys want to look at anything? Anyone? Guys there? Here's a situation on the S&P where the market sold off, and again, it's tried 1, 2, 3, even 4 times to break down, and notice how it's compressing in here. And usually when you look at this, okay, this is 1, right? This is 2, this is 3, okay? And usually the 4th one is usually broken. Here's an example here where you got, this is all really one test. Market ran up, second test, third test. Notice how we kind of compressed in here. And then look what happened on 4th test. It broke it on 4th test. Start looking for these patterns, and you're going to start seeing these reversals or breakouts. You're going to know which breakouts to trade. When I first started, I didn't know which breakout to trade. You know, I end up trading a breakout and get stopped out. And then I realized, okay, if I wait till the 4th or 5th time, especially the 4th time, you know, if I've got context and I wait to the 4th time, you know, I usually that trade works. But if I try to do it on a 3rd time or even a 2nd time, it usually end up failing, and I end up getting stopped out. Only to see it, you know, especially on a 3rd time, only to see it happen and go through on the 4th time. So this is just picked up from, you know, sitting here and trading and making mistakes and finally realizing what works and what doesn't. So, and then when the market does break out of a pattern, if you see some type of chart pattern, when the market does break out, you know, again, typically what you'll see is here's 1, 2, 3, 1, 2, 3. At this point, it's getting ready to go either up or down. Okay, because this will be 4th test, 4th and 4th to the upside. When it does break, it'll come back, typically kiss goodbye, and you'll see typically 2 to 3 new highs. Or if it breaks down, come back, kiss goodbye, and you'll typically see 2 to 3 new lows. That's the expectation. So you know if it breaks out and you catch it here, okay, don't just go for a quick target. Let the market continue to go down. Okay, so for example, when it broke down here, and then we'll look at that symbol, and it broke down here, right? What did it do? It broke down. There's your kiss goodbye there, and we've got 3, if not even 4. And here's 1, 2, 3, even 4 new lows. Okay, it'll also typically go the width of the pattern. So if this is the width of the pattern, then the expectation is, at a minimum, we're expecting it to go down to here. So you can use that for target. So if you know that, hey, there's the width of the pattern, we break down, I'm going to get short here, I'm going to target an area somewhere in this area. So maybe even lower, because it's just transitioning from up to down. And the other thing to keep in mind is too, if the market's, if you've seen a sustained move of 3 to 4 swings, the meat's off the bone. Okay. So if you're trying to buy in here, this is okay. But if you're trying, even this, the meat's off the bone, because we've got 1, 2, 3, 4 pushes to the upside, or even more in there. If you look at it, if you dissect it even further, the meat's off the bone. So at this point, you look for a correction before you start buying it again, or even possibly trade the short side. Make sense? So I think key takeaways is when you see a sustained move, look for 3 to 4 pushes. Okay. When you're buying a pullback, look for that pattern, that 1-2 retest failure. This is a retest and it fails, or the measured move down pattern. Okay. And then also for reversals at tops and bottoms, you'll typically see something like that, where it puts in 1, 2, 1, 1, 2, 3, 4. Okay. Or in the same thing for tops. And sometimes you'll see, a 1, 2, 3 pattern on the way down here. You'll see like a 1, 2, 3. You'll see something like that where you get a 1, 2, 3 at the end. Those are, you trade that every time. See if I can find one here. Well, here's kind of one here. This is a reversal. It topped out. See, 1, 2, 3. See how we got directional move, and then you get a 1, 2, 3. And then, but notice this right here, this consolidation. What do you got? 1, 2, 3. We tried one more time, 4, and then it failed. If you look for these, they happen all the time, everywhere. Okay, if I go back to here, when this thing topped out, start looking for these patterns and taking advantage of them. Look at this. There's 1, there's 2, there's 3, there's 4, and then it failed. Did you guys see that? It happens all the time. Actually, you got a little bit more than that. Well, this is kind of, you got 1, 2, 3, and even 4. If it was going to go, this was it. If it was going to go, it should have gone here. Okay, and it didn't. It failed. So right in here would have been a great shorting opportunity if you had context. But if you were long, this is an area where you definitely want to be out of your trade, because chances are we're going to see a correction. So start looking, and then notice too. Look at these lows here. Here's 1. There's 2. There's 3. Even 4 and 5, depending on how you look at it. But start looking for these things. They're powerful, very powerful. You want to look at HG? Yeah. You look at HG from a day trading perspective or swing trading perspective. Like on a smaller time frame, day. Okay, so from a day trading perspective, sure. Oh, that's the other thing too. I like to use the volume average price with the standard deviation bands, because that'll tell me, that kind of defines, whether or not based on the intraday price action, whether or not we're kind of overbought or oversold. So this is my VWAP with the +1 and -1 standard deviation bands. And notice when the market is above that +1 in here, unless it's trending, right? Then chances are we're kind of in overbought territory, right? And when the market's down here, we're kind of in an oversold territory. But notice, well, how do you know that this isn't going to, come back up in here? that's where you have to look at the larger time frame. Notice when off this larger time frame, when the market broke down here, okay, we're actually transitioning from up to down. See that? We've taken out major support in here, and look at pretty much what here. I could put this line in here like this, but also that 1, 2, 3, 4. Whoops, sorry. It's going really slow today. There. So I've got this diagonal trend line support here. Here's 1, there's 2, there's 3, right? And then look what happened on 4th. Why isn't this 3 and that? Well, the market, I mean, initially you're thinking that, right? And then you see that we're failing to make new highs. So it's like, okay, it's not. You have to, sometimes you'll see it where it establishes, originally you're thinking that, but, and also look at the space here. They're usually about, time-wise, they're usually about the same amount of space between 1 and 2, between 3 and 4. Okay, it's tightening it up, but that's, if you use that, then you're not calling this 2, this 3, and so forth. Okay, makes sense. But notice how it broke here, and with the expectation of the breakdown on 4th, you're not going to buy this. Okay, but even if you did, you got a little bit of a tradable reaction right in here. You got a little bit of a tradable reaction. Okay, but would you buy it based on what I already showed you? Okay, here's where the market compressed. There's a little 1, 2, 3 pattern right there. 1, 2, 3. The market had broken down, and remember, and this is really your first pullback to the moving averages, right? So you're going to draw your trend line like that, but you're not connected to another pullback. You know what I'm saying? This is just the first. You need a second. So you can't really, you're not drawing your trend line like that. But I mean, initially that's what you're thinking. But if the market had done this and pulled back again, okay, then you've got a trend line. So there's no trend line there. So technically, you know, there's no entry, because if you trade off of that 1, 2, 3 pattern and look for the trend line break here, looking for that break, okay, well, there's nothing there. It didn't happen. Okay, there's nothing there. Now this, if we broke trend here, you know, if the market came down in here and went like this, then you can look to trade it in there. See that? But that's not what happened. It continued to go lower. So then what do? Well, here everything kind of compressed again, and then you see it pulled back. Okay, so in real time, what you're looking to do is, here's 1, 2, and we move lower. So you can draw your trend line across those highs, and we just continue to move lower, right? So then what I would do is draw the trend line across these highs, and then look to get long down in this area, somewhere in here. Okay, this will keep you from kind of catching a falling knife, because I used to catch falling knives all the time. And then, you know, I'd even add to the position. I'd be like, oh my gosh, why isn't this going up? And then I look, this is before I looked at the larger time frame. And then I look at the larger time frame, I'm like, well, I know why this is going up now. It makes sense because it's breaking down on the larger time frame. So you have to use 2 charts. You really need an anchor chart so you get that bigger picture context. I've coached so many traders, and I'm like, show me your charts. And they show me 1 chart. I'm like, you got any other charts? He's like, no, I already looked at them. I'm like, okay, well, that's your biggest obstacle right there. You want to always look at 2 charts, get that bigger picture context, see where you're at, and then, look to trade it off the smaller time frame in confluence with larger time frame. So, and even then, even if you went long in here, that, you maybe got your first and second target hit. And what I like to do is I like to base my targets off of volatility. So what I'll typically do is I'll look at just a half standard deviation. So if I'm going long in here, when it pulls back to that 13 EMA, I got at least my first and second target hit from a day trading standpoint. And then what I'm also looking to do is, notice here, you got 1, 2, 3, 4, or even fourth or fifth, depending how you look at that. It broke it, and that actually could be an entry in there to the downside. And it's also, what does that look like to you? You guys are familiar with head and shoulders patterns, right? So well, honestly, it's all about price and then lining yourself up with location. I typically look to, when I see that the trend is down, okay, I'm looking to short here and around here, around that, the VWAP or the -1. I mean, or up here, of course, anywhere up in here. When the trend is up, I'm looking to buy it. If it's strong trend, I'm looking to buy it, well, at the first standard deviation band, VWAP on a retest, or, down in here below that -1. And by narrowing trades down to those areas, I've been able to, one, I don't overtrade, and two, I'm usually, as long as I'm on the right side of the market, I've got usually good location, and it's usually ended up being a really good trade. It just depends on, so I use the volume. I used to draw zones and everything. I use the volume average price with standard deviation bands for location intraday wise, and you can do the same. So I'm a shorter term trader. I don't do long term trades. Even our bots are shorter term. I mean, they'll hold on to the trade all day, but they're out at the end of the day. So there's no overnight margin on our automated trading strategies. And I'm pretty much a day trader. So I do some swing trading here and there on stocks, and I'm very picky, and I'll find stocks that are outperforming, like, looking at 3-month, 6-month new highs, and then go and find something that is like this, where it's just starting the trend, and then I usually trade the option on it, as long as I got tight bid-ask spread, usually at the money option, or like even slightly out of the money. That'll give me better actually return on investment anyway, slightly out of the money. So and usually get a nice gain out of it, because you're trading a stock that is outperforming. So when the S&P is either going sideways or down, this stock is moving higher because it's outperforming. So yeah, that was any specific questions about natural gas or copper? Sorry, natural gas, NG. Any specific questions about copper? Buying. I don't long calls, long puts. That's all I do. I don't do spreads. I mean, you could do spreads. I like to base it. The thing with spreads, I know, you got 2/3 chance, right? But I don't like doing spreads. I like to just go straight long, keep it simple, long calls, long puts, base it off of price action. If you look for those patterns and you use something like a shorter term moving average, I mean, think about it. Okay, look at what's going on in here. Back to that RSI 2-bar. Just if you take the RSI 2-bar, okay, and notice how the RSI 2-bar here is below, I think it's 10 or 85. I don't know why it's not showing up. It's 15. It's 15. This is 15 and this is 85. Notice how the RSI 2-bar, one, we're in an uptrend, right? We just made new highs here, right? You wait for the market to pull back. You get that 1, 2, 3 pattern. Here's 1, 2, 3. Okay. And it's simple. I mean, it's just getting used to trading like this, but it really is a simple method. And it works. Where's the drawing tools at on this thing? I haven't used there drawings. What? Where's, oh, down here. I use per million. So here's 1, right? There's 2. There's 3. Okay, there's my 1, 2, 3 pattern. The RSI is oversold. Okay, so where's the entry? Close back above that ADMA. So if you're going to trade this off the daily, you'd be entering long right there. Okay, so honestly, it's a simple way to enter the market. Okay, here, let me put this down here for you. So you're using an RSI 2-bar. I'll write it out. Then you've got a trade plan. RSI 2-bar on daily chart. Okay, look for 1, 2, 3. Let me call this a declining 1, 2, 3 pattern. Look, either one of these. Okay, look for either that declining 1, 2 retest and failure pattern, and I'll show you that. I've already showed you, but declining measured move down pattern. Okay. So you're looking for one of these patterns. Look for one of these patterns. I wanted to give you guys something actionable today that you can do on your own and start trading. Look for one of these patterns, declining 1, 2, 3, 1, 2 retest fire, declining measure move down. Okay, with RSI 2-bar, close trading below 15. Okay, that's the setup. This is the trade setup. Well, first of all, you need new highs. New high, right? Preferably and if you're trading like stock, for example, relatively stronger than S&P. Okay. So you look for new highs after new, let's say that's after new high, after new highs, right? Look for one of these patterns, okay, with the RSI or in confluence with, does that make sense? So new high right here. Where's text at? New high, right? I mean, this is your last, this is like your significant high here. So you got a high here. Okay, new high. Where'd it go? After new highs on a stock, preferably stronger than the S&P, and you can, again, you can look at something like this, new highs and new lows, and then find the stock that's where there's plenty of volume. Okay, like this, that, okay, even anything over 1 million shares, right? And then if you're going to trade the option on it, make sure you got tight bid-ask spread, plenty of open interest. Okay, so typically, if you're going to trade the option on it, you want something. You notice how the bid-ask spread is really tight. This is only 15 cents. This is that's actually 20 cents. But look at the open interest in here. There's plenty of liquidity. Okay, so it's going to be easy to get in and out of the option trade. So once you find a stock like that, then look for one of these patterns on the daily chart. Okay, there's your 1, 2, 3. It confluence with the RSI 2-bar closes or trading below 15. Notice that's the case here. See that? So the RSI 2-bar is below 15. Are you going to look to trade? No. Okay. What you're looking for is that close back above that 8 EMA, for example. Okay. Are you trading this day? No. You're waiting. Are you trading that day? No, but you're probably getting anxious because now you got a bullish day. Are you trading that day? Yes. And you could actually, if you wanted to, you can wait for it to close, or if you want to be a little more aggressive, which you can because you've got context, you can wait. You can actually put in a mark, like a conditional order to buy, for example, let's say the $15 strike price call option, and you can use the function of the ATR, like 25% of the ATR above whatever the 8 EMA value is for that day. So then you'd probably in let's say it's around 16.15. So you'd be in on this day around 16.15, or you wait for the close and you're in at 16.40 or the last hour. Some of the best option trades I've initiated during the last hour of the day. And then you catch the overnight move. Sometimes, you take a little heat on it, but then you usually catch that overnight move, and then give it some room. Your stop below the swing low. Okay. Or if you've got a bullish day, you can go below that bullish day where that responsive buying was. You can really narrow it down by looking at the 30-minute chart. But this is this, what I'm showing you works on even just the daily chart. Okay. And then enter, or, buy, call option, whatever you're doing, on close back above 8 EMA. Okay. So it's the same thing here. Okay. So let's look at this. Well, the trend is down here. So this is, we would be focused on shorts today. Okay. So after 5:30 this morning, you're focused on shorts, because notice how we're below the moving averages. The 8's below the 21, below the 50, right? The moving averages are stacked, because this is my 8. And I only have more minutes. 8's below the 21, below the 50. This is from blue to red, right? So I want to focus on shorts. So what I'm going to look at is actually not a long there, but a short. And what do I have? Well, I got off this low. I've got 1, 2, 3. Okay. And if I'm going to go short in a trending market, I'm usually focused in around this line here, or up here, right? And there's a short right there on that close back below the 13. I use a 13 on a 1-minute chart. The 8's a little too fast. But notice how it lines up with that trendline break. Remember what I was talking about? You get the swing low here. There's, in that 1, 2, 3 pattern, you're drawing a trend line across those two that make up the 1 and 2, first and second pullback in a 1, 2, 3 pattern. Draw a trend line across first and second pullback. Here's 1, here's 2, and notice that right after it broke that, it just, the responsive selling really came in, and then an aggressive seller stepped in. So, and you've got location here, but usually you can get in a little bit early right in there. So close back below this 13 EMA would have got you short right in there. And then your targets would look something like this. Okay, so if you shorted it on the close back below, there's your trade right there. Okay, and it doesn't matter what market it is. So, Stan, when you're doing options, how much time do you buy? It depends. Typically, first or second month. So if it's after the 15th, if it's before the 15th, I'll like if it's before the 15th, it's next month. If it's after the 15th, then I might even go further out. So, but I primarily futures trade. And like I said, I've got the bots running. Let's take a look, and I'll post that link. If you guys are interested in learning, if you like what you see here, okay, this is just a precursor, but if you're really interested in learning about what we're doing with the automated strategies, let me get that link for you guys, and then I'll wrap it up, unless you guys have any other questions, because I know my time is, I need to wrap it up here. So let me find that link. I'll post it in there one more time. There you guys go. So, but at least I hope I've given you guys some actionable trading strategies. And if you want this, here, I'm going to post this in here. If you guys want to take that and run and make a screenshot of that, so this way you have it. And I'd be curious to, let me post my email address in there. I'd be curious to find out how you're doing with that. Let me know. Feel free to reach out, keep me posted. Let me know how you're doing with that strategy. So, all right. Cool. Well, I hope that helped, guys. I don't have anything else. David, I think.
All right. Thanks, Craig. Lots of good analysis today. So thank you for being here.
Yeah, thank you. Appreciate it.